Hello, everybody. In the current affairs this week, let us first start with the Indian markets. The Indian stock markets, right from the large cap, mid cap to small cap, all were up in a range of 2.3 to 2.6%. Then, as far as the 10-year GSEC yield is concerned, the trend of softening of interest rates was visible in the 10-year GSEC yields in India. It was down from 7.26 to 7.16%. The trend which we have seen in the entire year 2023 is that the FIIs were sellers, or they did not buy any stocks in the Indian stock market, and domestic institutional investors, DIIs, were the buyers. At the fag end of 2023, the trend is changing. FIIs in this week bought Indian stocks to the extent of rupees 18,858 crores, while as DIIs were net sellers at rupees 2,592 crores. So the trend is changing and FIIs are once again taking interest in India. The two sectors which were noteworthy, which moved up very significantly in the Indian stock market, were the IT sector and the metal sector. Nifty IT was up by 7.16% and Nifty Metal Index was up by 5.06%. Coming to the commodity markets, the international commodity markets, Brent crude and gold, were up by around 1% and silver was up by 3.77%. This silver rise can be compared with the decline in the value of silver last week, which was sharply down by 8% plus. When it comes to the US market, the most noteworthy thing is that the rates of interest in the US are softening. The 10-year GSEC yield in the US in this very week is sharply down. From 4.23%, it has come down to 3.91%. The Nasdaq and S&P 500 were up by 2.5 to 2.8% this week. Another very bright, interesting news which I would like to share is that the direct tax collections in India from April to December 2023 were up by at least 20% year on year. This is a very noteworthy phenomena which is happening in the country. These are provisional figures and they would get finalized in the next week. These are the collections till around 12 o'clock on 15th of December, which is the last day to pay advance tax. There is a massive build-up on the infrastructure side which is happening in India. Now, we have been always looking at the way the road and the other infrastructure in India is being built. Now, coming to railways, railways always had a scenario where there was a lot of demand for railway tickets and we didn't find enough trains. According to the railways, they estimate that only if there is a 30% rise in the number of trains, only then we will be able to meet with the total demand of railways, whatever is existing in the country. And for that, we are so happy to note that in the coming 5 years, the government is planning to invest 1 lakh crores in the railway network. This is not just an spending on railways, but all the peripheral industries which are connected with railways will also benefit very substantially on account of this spending. These are the trends which are happening in the Indian market and the Indian economy, like the collection of direct taxes, which shows the kind of compliance which is increasing in the country, and the kind of less cash economy which is developing, and the railway spending is an indicator as to how the country is moving to build a world-class infrastructure to benefit and facilitate the people of this country. Thank you.